Welcome back to Investing with Confidence. I am your host, Joshua David, and we are having fun talking about that one thing that we all love to talk about. That is the stock market. If you're just tuning in, Al was shedding some light on different things that you need to do to follow those institutions. Who is controlling the market? Who moves the market? And also the funny thing too is what you're being told by brokers and advisors. You're told, don't do this because why? They need assets under management. So we're seeing more and more people realize that and want to take their own capital and really be the best steward of their own money. By the way, if you happen to miss tickets to that investing class, just call 952-814-4410. If you call now, you're going to receive a financial quick start kit. There's some topics in there that'll help you get started right away, but also a cryptocurrency foundations course, or you can just text the word invest to the number 484848. We'll send you a text back with the link. There's also a little short little video on what to expect in your free class coming up. So Al, just recapping the markets, and I told you earlier we had a great move in the market, and it actually kind of dropped a little bit this week out of those all-time highs especially from the last 2-3 weeks. It's been skyrocketing. So we're seeing more volatility come in through, but the S&P has dropped a little bit. Same thing with the Dow and the NASDAQ. One thing I want to just talk about real quick here, Tesla. Elon Musk doing a poll on Twitter to sell a portion of his Tesla stock. I tell you, I think that was a little trick that he was doing, maybe to take some gains out of the market. I think that's a possibility.
He's got a big tax bill he has to pay. I think that part of it was to cover some of those taxes.
Yep. And one thing, actually, I was coming into the studio here this morning, and gas prices. We've been talking about these gas prices for a while. Oil it's been on a tear for months now. And we've seen some sideways action here the last couple of weeks in oil, but those gas prices keep going up. And that goes back to our inflation talk in the first segment on why you need to have more techniques to have more income potential in your life. It's not just having one job to pay for your bills and filling a wealth bucket and having some fun. You got to have a little fun in your life, right?
I hope so.
But this inflation, it's everywhere. So let's talk about those techniques that you need to learn to follow that smart money to make better investing decisions with that short-term style of trading.
Well, I think it's become even more important now to learn how to generate shorter-term income, additional income, and inflation's a big part of it. When we're talking about inflation now, it's doubled or close to tripled from where it has been for a while. If you look at that and then you take into consideration the cost that's involved in the trading that you do if you're using a financial advisor or broker, and that has a significant impact on what you could have, not just now, but in the future, because what you need now to build for the future is additional income. I mean, if most of what you make from your job is going to pay your bills and to have a little bit of fun, like Josh mentioned, hopefully a lot of fun, there has to be some left over to put into kind of your wealth bucket. And for a lot of people, it means having an additional source of income. For a lot of people, they just go out and they get a second job or a third job or a part-time job. Fewer and fewer people are doing that now. In fact, more people are actually leaving the workforce. But here's the important thing is to understand that there are assets that you can trade. There are strategies that are really designed or are ideal for shorter-term income, whether you're looking at that now or in retirement. I mentioned initially that part of the process or the strategy that you should have to be successful is one that shows you how to time changes in price, timing the market, basically. And we talked about the fact that you've been convinced you can't do that. Well, we have a strategy that does it. The institutions, the pros are doing it. It's just you have been told you can't do it. I mean, that's kind of an insult, I think, to people because you can do it because the education is there, the knowledge is there to be able to do it. But here's the important thing,
though. You hear something over and over enough times, people actually believe it.
They accept it, and they accept that as kind of a ceiling beyond which they can't go. But to time the market, what you have to be able to do is to identify where there's going to be a move in price. And the origin of any move in price, whether it's a continuation of a move or whether it's a turning point in the move, in other words, a different direction in the price, the movement of the price, it's always where supply and demand is out of balance. And that's a law. That's law of supply, called the law of supply and demand.
It is.
It's a fact that really can't be argued. If there's more demand for something, price will go up. If there's more supply, price will go down. In the financial markets, and there are numerous markets, not just the stock market, but in the financial markets, the institutions, the people that have hundreds of millions or billions of dollars to put into a trade, they have the clout to move the price of something. So if they get into a position, their demand, the demand that they create is so great that the price is going to move. So what it would be the key, the most important thing would be to be able to know where they're going to do that. Not where they have done it because price has already moved away then, but where are they going to do that in the future? And the way that they have to trade because of their size gives us an opportunity to take advantage of that. And in these classes, we go into detail on how we do that. But that's exactly what our core strategy does. It helps you to identify where the unfilled big players' orders are and where they're going to come into the market in the future. So you can be prepared. That's how you time the move in a price. The other thing is to make sure that you're protected. If you're wrong, and if you think you can be in the market and be right 100% of the time, I'm not sure what you've been drinking or smoking, but you might want to stop that right away. You can't. Nobody can be right 100% of the time. No one is that good. So the key then is to make sure if you're wrong, first of all, make sure that you're right more than you're wrong, but you don't have to be. But your wins have to be larger than your losses. It's a reward to risk. We show our students how to structure that in a way where you could be wrong as much as 60% of the time and have the potential to still be profitable. That's managing the reward-risk ratio.
Yep, you're just managing your capital properly. And, I mean, to give an example of, when Al's talking about timing the turns in price, I mean, think of it this way. Everybody knows the home market after 2008.
Right.
Homes were just crashing. Prices were just going down. Well, there's ways that institutions knew where that might be turning, and institutions were gobbling up homes and thousands of these homes. And then what happened now? Homes are at all-time highs again. So the same thing is in the financial markets with the stock market. It's understanding where prices may turn and where they will go, but doing that in advance, and then you just let price come to you. An Online Trading Academy has a strategy that's designed to teach you to follow those institutions because they're moving these markets. We want to trade like them. It's kind of like that little. You ever go in the ocean and swim with the sharks? I don't know if you've ever done that before.
I've swum with dolphins, but I prefer not to swim with sharks.
Well, if you ever look in the have you ever watched one of those TV shows where there's little fish swimming with those sharks?
Oh yeah,
and they're picking up little scraps off of it, right?
Remora fish.
There you go, remora fish, and that's what the retail trader investor should be is that remora fish, trading or following that shark, which is the institution, and just taking pieces as they go. So it's just being that small little fish out there in a big sea with those institutions.
Yeah, and who's doing the work? It's the shark.
That's the shark.
Yeah, you're rewarded by taking advantage of the work that they have done. That's how we try to make this more simple and more accessible to more people.
Yeah, but first you have to understand what that strategy is, and we talk about that strategy in these free investing classes. And it's a strategy that's designed to teach you to make smarter investing decisions. So just let's do this. Let's just text the word invest to the number 484848. We're going to send you a text back with a link, which is actually otamin.com. That's otaminn.com. Just pick a date within that link for the investing class. We do that. We actually do some virtually, whether they are virtual. They're about 45 minutes. Most people come into the center here in Bloomington. We actually got a pretty decent sized amount of people that just came in last week, and these are in the center. They're only 2 hours, so it's 2 hours of your time, really. So just text the word invest to the number 484848, and then we'll send you that link back to register for one of these classes. They're free, and we're right here in Bloomington next to the Mall of America. So, Al, we talked about these. You have to understand a strategy that's designed to trade with the big institutions, to swim with the sharks, right? Now, we also need to have the right assets as well. Now, we're taught and conditioned. We talked about conditioning earlier. We're taught to go buy stocks. To go put all your money in the stock market because it's the best, the biggest thing in the world. That's where everybody is at. Well, I'll tell you what. It is the smallest market that is out there. Mm-hmm. Talk about those markets that have much more liquidity, which is what we want as a trader or investor. And then how does that work for, like, say, everyday people that have jobs during the day?
Well, one of the reasons that people know about stock and invest in stock or mutual funds, which are just a bunch of stocks in a product, or exchange-traded funds, is because that's what Wall Street wants you to rely on. Those are long-term, what we call buy and hold type strategies. If stocks are great for your long-term wealth buildup over time, but we were talking about income and how important it is to have additional sources of income. If you have a long-term portfolio that you're supposed to hold on to for decades, it's pretty hard to be able to access money short-term. And for a lot of people that have put together, say, a stock portfolio, an emergency or something comes up where you need additional money, so you have to sell some stock. What if you're going through a bear market or a major correction at that point in time and you're selling low? Which is exactly the opposite of what you should be doing. So what are some of the other things you can do? And by the way, these are exactly the same types of things that the big institutions are trading. Goldman Sachs, Merrill Lynch, J.P. Morgan, Warren Buffett, the hedge funds, the pros. They are not, I can guarantee you, they're not buying and selling mutual funds. They're not buying and selling annuities. They may have some stock holdings, but they are trading more short-term vehicles, such as the futures market, the foreign exchange market, the options market. And for most people that are in the markets, the goal is to try to obtain a profit, a small profit from a large account. But the pros attempt to realize a big profit off of a small account. Mm-hmm. Basically, it's just controlling a lot for a little is what it is. And we can do that because these products have leverage. They allow you to have a smaller account that can control a much bigger investment. It's a multiple of that. It's very much like a mortgage. We talk about that a lot. Most people are familiar with that, but that's a great way to put maybe $20,000 down and control a $200,000, $300,000 home or investment. That's the same thing you can do in the various markets, the options market, the futures market, the foreign exchange market. Most people that haven't heard of those, well, maybe they have, but what you've heard is, well, these are way too risky. I shouldn't be playing with those. Well, it's not that they are risky. In fact, it's like,
what's risky? Putting all your money in a stock, with a hope for it to go up. That's risky.
Well, if you put your money in a stock, what direction does it have to go for you to make money?
It has to go up.
It has to go up. Market doesn't always go up. It's like having a Lamborghini sitting in a driveway. The Lamborghini is not risky sitting there on its own. It becomes risky when a person gets behind the wheel that doesn't know how to drive it.
Yep.
And same thing is true in the markets. It's just lack of knowledge which is available to you, and making sure that you understand the risk management component of any trade.
Yeah, you're just managing your capital the right way. I mean, that's what the institutions are doing. So we want to trade like them. I mean, having these markets like the futures and Forex market, great opportunities to have income potential with the markets. If people are looking for that extra source, that might be an opportunity to look at. These are 24-hour markets, open around the clock. So if you're working during the day, well, you have the opportunity to have that income potential at night. And that's what it's all about, is having another source of potential cash flow. Al talked about leverage. So most people, and there was actually a poll, I think we talked about this a few weeks ago, where some people haven't gotten in the market because they don't feel like they have enough money. Mm-hmm. Use proper assets that allow you to use less. That's what the institutions do, even though they have billions and billions of dollars. So what do we want to do? Trade like them. If we want to get introduced to these different assets, they're not new, they're just a little bit different. Al teaches investing classes right here in Bloomington. They're free. They're about 2 hours in the center here, otherwise about 45 minutes online. So just call 952 right now for callers 1 through 10, 952-814-4410, or just text the word invest to the number 484848. You'll get a text back with a link, also a little link for a short video on what to expect in this investing class. 952-814-4410. You're also going to get a financial quick start kit just for doing that, and that'll help you get started right away. Coming up next, Al, I want to continue the discussion about timing the market and have the opportunity to have income potential, but more in retirement, because you have to have more sources as you get into that time. 952-814-4410. We'll be right back.
a second.